extended to the downside. And I said, you got to really be careful trying to take any shorts from down here, and that I'd only be interested in longs. So there was an alert that came out at just before 11 p.m. Eastern last night. I didn't pay any attention to that. I actually went long this morning, just with my own experience. I caught longs. This zone, I was in longs, and I took some losses looking for longs. I was in prematurely, and then I took another long right at this structure point here. Identified that just as a really good demand zone. AIO software is pretty patient. It called the long at the next level up, the next block of price up. It wanted to see price confirm support above the top of these candles right here. So if you look at the way that the AIO analyzed price action, you can see there's these green candles here. Probably hard to see because of the white background. I might have to adjust my colors for you guys. It's hard for me to see on my end, but there's green candles and then red candles. And if you look, we didn't have a confirmation of support above these green candles here until this area here. So that's where the AIO decided to call a buy after this was confirmed. It's what we call a market flip, where resistance becomes support. And then something I always teach people is previous levels of support become new levels of support after the lowest low. Okay, so previous lows become new lows after the lowest low, right? That's a reversal. This was a very typical inverse head and shoulders. Even on the higher time frames, this was a very clear reversal structure. Here's the NASDAQ. And if you take a look at the 4-hour chart, it's very obvious here that we were going into a big reversal pattern. This is what we covered last night as well. Let me change this to yellow. There we go. So you could see here, these are the left shoulders. This is the neckline. This is the head. We could see we broke well above the neckline, and we also went higher than this level here. This is another neckline. It's like I would say like a second level neckline to this head right here on the 4-hour. Because these candles came up higher, that's indicative that we're not going to get all the way back down as low as these lows down here. Okay, so it's all related. Okay, this is a pattern that's been around for 25 years. There's a reason why this pattern is visible on the charts over and over again. I think the biggest problem with retail traders and institutional traders, the difference is that retail traders, they start to see these patterns and they get in right away. Like, oh, it's forming, let me jump in. And price likes to take its time, right? We talked about that earlier this week, that when you come down to a higher time frame zone, price loves to manipulate. There's going to be a lot of wicks. There's going to be a lot of false pushes down before there's a major push up, because it's going to take you out. The goal is to take you out before that move goes back up, right? And that's not literally you. That's not me. It's not literally you and I. But remember, we're following the price of a very competitive environment, institutional order flow. These are real contracts that are being purchased and sold. There's a finite availability of assets, so they have to be highly competitive. It's highly manipulated, right? Institutions have to literally trick each other to sell in order to absorb at good areas, and that's where you'll see a lot of spoofing, right? Spoofing is a term in the institutional world where there's fake outs, right? So all that to say, these wicks down here, when I saw the 4-hour kept pushing down and kept manipulating down, to me, that was already calling for we're going to go up. That's what it meant to me. So we got the reversal. Now, this may not be the ultimate reversal. It may not be, okay, because there's still a couple levels down low, a little bit lower. If we really want to maximize this thing, we could still see one more rejection down and then support like this to really go up. Okay, this pattern that I'm drawing is a little bit more reasonable. This would be a little bit early, but early reversals signify anxious anticipation. It means that the market's anticipating bullish behavior, that Nasdaq is a permanently bullish asset, and that they want to go up early, which means you're going to have faster, stronger movement to the upside, right? So there's a lot of different factors that we look at. I wanted to break down, why did the Nasdaq call the long where it called it? It was waiting for confirmation. Anytime you get an alert on the Nasdaq, you're going to see that it's always based on a major break of structure. It's going to wait for retests. It's going to wait for continued momentum into that direction to catch the trade. And these alerts are all meant for higher risk to reward opportunities, right? Like the RR on this alert right here, it's probably already sitting at like I don't know, like a 1 to 5 or something, 1 to 6. I don't know. Again, we're going through an evolution with the software where we're going to be speeding things up. So with that being said, I'm going to stop the screen share right there. And I'm going to pass the call over to Mr. Ryan Resnick. Happy Thursday, Ryan. And I'm going to go ahead and mute myself out. Happy trading to everybody.
All right, good morning, everybody. So this morning we had the PPI news release, as you see on the charts. Very, very bullish action from that release. I don't even bother looking for executions on days like this. Like we discussed, what we're going to be doing is piggybacking on the prop firm or kind of the risk management and kind of how to take advantage of the call outs on this morning session or the AIO if you trade prop firms, how to manage your position for these prop firms. Today we're going to dive into what prop firms actually are and the different pros and cons of each firm because there's so many of them. So hopefully we can record the this kind of like the last time. That'd be very helpful, just so some people can look back on it. So today I don't trade on CPI, PPI, or NFP. So I don't look for executions on days like today. So we're gonna dive into prop firms, okay? Highly requested, right? Last I think it was Monday, yeah, we talked about how I leverage prop firms. I mean, my model is essentially built around trading prop firms, the system that I trade, right? It's based around the leverage that I use and the position sizing I use is based around drawdown. Understanding win rate, all that stuff was covered on Monday. So if you haven't seen that, really important. I think you should go look out that recording for Monday. But yeah, it'll be recorded, Jay, I hope. So, what are prop firms? Okay. Well, prop firms are a way for us as retail traders to leverage our capital and actually protect capital, right? So, we're going to talk about how this can actually negatively impact us and a little mindset shift we get from thinking it's capital protection. When used properly, it 100% is capital protection, right? Where are these recording kept? That's a good question. I saw where it was posted, but uh, the AIO training, no. Where was it? I don't know. Someone can help me out with that. Sorry. I forgot which section it's under, but I did see it uploaded. Okay. So, prop firms, yeah. Okay. Oh, under prop firms, yeah. That makes sense. So, this will go into the same section, right? But let's make a comparison between a live account and a prop firm and how you would approach trading both, the pros and cons of each, right? And why I choose to trade prop firms in my experience trading live capital versus my experience trading proprietary capital. So let's say, again, I don't know exactly what brokerage requirements are, but I'll use this as an example for myself, right? So as you guys know, I failed miserably like gambling crypto swaps when I first started out. That's how I was introduced to trading. When I was like 16, I threw a couple hundred. I think it probably in the end it was probably a couple grand that I ended up losing in a live account, right? Just being silly and not knowing anything, tossing money into a brokerage and pressing buttons, right? So that is live capital, right? 2 to 3 grand. Now let's take a look at what a 50K funded account looks like. Now you don't actually obviously get 50K worth of capital. You get a 2K drawdown, which is the equivalent of the $2,000 live account, right? But on an eval, or let's use Top Step for this example. What you do is Top Step is a $50 eval, and then it's a $150 activation fee. Or there's another option we'll look at later where you just pay $89 one time. What happens is when you pass this account and you get to the XFA where you're available to request your balance and get an actual payout and you're not trading for just an evaluation, it's still simulated funds, but you're trading for a real payout, the $200 you pay for the account turns into a 10x leverage, right? So why is this helpful? A, first of all, for beginner traders, we are minimizing risk when done appropriately. And I'll talk about, why this goes wrong and goes south for a lot of people and why people lose a lot of money trading prop firms in a little bit. But for now, let's look at both of these accounts and I'll use my real life scenario again. What happens when I was a dumb 16-year-old with no actual trading knowledge and I blow my $3,000 portfolio over however many weeks? That's very intimidating as a very beginner trader. I didn't actually step into real trading. I was just pressing buttons and gambling, but I'm down $3,000. What prop firms allow you to do is trade in an environment where you don't have that type of money on the line. You can still trade the same exact leverage, except in this case, you have the same exact opportunity on both accounts, and we'll cover like payouts and stuff too. Um, but with 10x leverage, right? So what happens if we blow this account? Well, we only lost $200. We lost a tenth of what that live account would look like, even though we're trading with the same amount of leverage. Okay. So that's super, super helpful as a beginner trader is that you can afford to work through the learning curve, work through learning a process, right? If you just toss all of your money into a brokerage and you have one go at it and you blow it, that's your one chance at it. And it's very, very hard and intimidating to try and say, I want to take another jab at it. Prop firms are great for that, right? And well, I guess we'll cover payouts in a little bit. But why do people struggle with this? If you guys look at the proprietary firm stats, they're not great. Why is that? Well, first of all, like we just discussed before, it's not like everyone that trades prop firms is a professional. Okay? There's still the same issues on trading live accounts that you do with prop firms. If you don't know what you're doing, you don't know what you're doing. You don't magically become a good trader just because you step into a Top Step account. You have to focus on process, systemacy, and having an edge in the market, or else again, all of this is just for nothing. If you hop on a XFA or a Top Step eval and you just continue to press buttons, you're going to continue to blow it the same way you blow the live account, right? So first and foremost, we'll get that out of the way. We covered that a little bit on Monday, right? Psychology and misunderstanding behind prop firms. This is also something that we covered on Monday, is that people think that we hop into a singular 50K account or something like this, and we think we're going to get rich off of this. We have this mindset, this is the end all be all, and in this one account is going to change my life, or maybe a couple of them. Completely incorrect. That's not how money's made with prop firms. And they have a couple tricks that I'll show you later, like when we look at profit splits and max payouts that make you think that that's how they're supposed to be traded. They're not. It's still really tight leverage. Okay, $2,000 if you're risking, like we talked about position sizing, it's technically not a lot. Okay, so people trying to make and flip these accounts that technically are still really, really tight on drawdown and flip them into, you know, $5,000, $6,000, $10,000 within like a week, 2 weeks. That's not going to happen with this much drawdown and the leverage you're given. It's great, yeah. For 200 bucks, you still get 2K in this example. But if you're trading and you're trying to flip 2K into 10K and you're over leveraging and you trade, however many times per day, you don't have any risk management rules, the account's still going to be gone. So this adds up and it gets into this mindset of it's so cheap, I'll just try it again. And I'm going to continue to gamble and gamble and gamble. And eventually, right, one of these times I'll over leverage and it'll pay off. That's not what we're aiming for with prop firms. Prop firms, as we discussed on Monday, and what we're discussing right now is that it's leverage. You make substantial amounts of money through trading with higher allocation of these prop firm accounts. So we're going to discuss copy trading a little bit more and kind of go more in depth into it because we discussed it on Monday, right? We discussed like you can make a lot of money just with 4 risk to reward, 5 risk to reward, which is a very obtainable number when doing it correctly. So people try and inverse it and they try and catch like 30 RR a week on one account. What's easier, catching 5 RR across like 2 accounts, 3 accounts, making 15R total, or trying to trade one account and get 15R on that one account with this type of a drawdown, right? So people reverse that a lot, and it's mostly due to not being patient, right? They don't have the patience to sit through the learning curve of seeing if they can even get one payout. They want to get it quick. It needs to happen now. That's not how this works, right? And I hope you guys are beginning to see that now. Right. So quick overall, let's cover this. What is it? It limits personal risk. It gives you very great leverage as a retail trader. Some people don't even have, tens of thousands or thousands of dollars to toss into brokerage accounts. Trade a prop firm. And it's pretty simple to scale from as well. Now, what are the cons? Is that there's strict rules that will cover regarding trailing drawdown for some firms, consistency rules. There are things in place that do make it difficult for you to get a payout. Whereas compared to a live account, you can make money and you could quite literally just withdraw it. There's nothing stopping you from taking money out of your brokerage. With prop firms, there's different requirements to achieve that payout, right? Now, the reason that I believe the pros outweigh the cons is because the cons, all of this naturally align with just improper trading as a whole. If you struggle with consistency rules and you struggle meeting the criterias that are embedded into prop firms, you're probably going to be a struggling trader as a whole. If your consistency is all over the place and one day you make $5,000, and I'll explain the consistency rule a little bit later, but if you one day make $5,000 and that's like the most you've ever made in a day, and you're struggling with the consistency rule because the next day you make 300 bucks, 500 bucks, and you over leverage, that's a trait of a bad trader. That doesn't have to do anything, that doesn't matter like prop firm wise. You're just a bad trader, right? And that's obviously going to end up with you blowing accounts. So naturally aligning these rules, I think they actually help you become a much more consistent trader. So it's annoying, yes, but if you're a good trader, you're not going to struggle with the cons. You're not going to struggle with consistency. There are some like trailing drawdown that are stupid. I'm going to cover that. But there's profit splits, which will cover all that stuff. So let's dive into different types of prop firms, different names in the industries, different costs, different payout structures, different rules. And I'll give you guys, what's beginner, what's best once you're experienced, how to approach these, all that stuff, right? So Alpha Capital, I'm personally not funded with them. I haven't traded with them at all. Reason being, they actually are relatively new. So they're tied to another, I believe they're the futures version of Alpha Capital. So this is Alpha Futures, but they actually have like a really good back end and they have notable like the company's run by experienced prop firm. I don't even know what the terminology is, but they have experience in the industry. So it's not like I don't expect Alpha Capital to just go under immediately, right? But let's take a look at the rules. So there's a standard plan and the advanced plan, which are, I think those are the most common ones that people trade. I don't know anyone that trades a zero account. Maybe some people do. But for $79 a month, it's a one-time fee. You don't have to pay an activation fee. And it's $3,000 for the profit target, $2,000 of drawdown, similar to Top Step, right? Same thing, right? If you blow this account, so let's say you lose $2,000, you lose just the 80 bucks per month that you paid, and you have to cancel the account and just get a new one, right? If you pass it, you don't have to pay anything extra. You just get the qualified account. The qualified account is where you're actually eligible to receive payouts on the balance that you're making on that account, right? So, some notable things about alpha is that the max allocation is 3 accounts. What's up, Jojo? Top step just went down. We're going to talk about that in a minute, too, right? So, the max allocation is 3 accounts. That means that you can copy trade a maximum of 3 accounts. So this is really important because this is related to copy trading and this is related to leverage. You always want, I think like 5 is a sweet spot for a very, very sustainable income or a very, very, it's really easy to make substantial payouts once you hit like five, 5 accounts, right? Like we talked about on Monday, you have 5 accounts, you can make 4 to 5 RR and clean 5 figures a month when risking properly, right? So max allocation for alpha is 3 accounts. Let's take a look at the payout rules for the standard account. So it's a 70% profit split with a 15K max payout. So a lot of people see the 15K max payout and they think that's an achievable number. They think, oh my gosh, that's really, really good for me. I can make up to 15K on this account. Guys, let's remember what the drawdown on this is. It's $2,000. A lot of people see this and they think it's an achievable number. They do this intentionally. They're like, oh my gosh, I can hit 15K. How many trades in a row? I'm not saying it's impossible, okay? But what is the leverage on your account that it would have to look like to have a 15K max payout? It'd be not sustainable, right? So something to note. So 70% split, that means you take 70% of the balance available. So if you have $1,000, you can request $700, and that will be money in your bank, right? And in order to request, you need 3 winning days of $200 plus. So you just need to have, that's pretty straightforward, right? You got to win 3 days with $200 or more. And you can request every 2 weeks. What's up, Mikey? So those are the rules for the standard. What I like are the payout rules. This is very similar to Top Step that you'll see in a little bit. So it's a 50% split with a max of 30K. Again, a number they put intentionally. But what that means is that you have $1,000 in your balance, you can request 50% of that, and you have $500 in your bank account, right? In this case, the reason I like the advanced account is because it's not based on a cycle. It's based on winning days. So every 5 winning days of $200 or more, you can request a payout. With this one, even if you hit 3 winning days, and even if you have a really strong account balance or you have several $1,000s in there and you want to request, you still have to wait for that cycle. Again, they do that intentionally. They want you to have a downfall within that 14-day cycle, blow the account, right? So that's alpha, and you can trade up to 3 of these accounts, right? So you're paying $79 as a one-time fee. Pretty solid. Pretty solid, right? Now, what I always recommend for one-time fees is they're going to be more expensive upfront. So if you're still getting into the swing of things with prop firms and you're still, again, learning this process and you're not as confident and you maybe haven't even paper traded or trying to see if you can pass an eval like this, try one of the firms I'll mention later, potentially, right? Because you're going to pay more, and odds are you're going to be blowing more of these evals during the learning curve. You want to, again, what are these prop firms for? Capital preservation. But once you become a very, very solid trader, one time like payments where you don't have to pay an activation fee after, always solid. So that's alpha. I can't personally speak on the payout experience because again, I don't trade with them. I don't know what the payout times look like. I don't know what the payout options look like. I know some of the students here trade with alpha. I think 1 or 2 of them have been paid out through alpha. So if anyone wants to share their experience, they can. But alpha's a new and upcoming one that's pretty good. The reason I haven't traded it is because again, it was pretty new. I don't touch new firms. I wait to see how they play out a little bit, see what the user experience is like. I don't dive in and test it myself. There you go. Mikey has alpha experience. Shout out. So let's take a look at Top Step. So this is going to be a really funny one because typically TopStep has been the industry standard for prop firms, pricing wise, payout plan wise, all that stuff, right? And this is for futures, by the way. We're going to cover Forex and we're going to compare Forex firms with futures firms. But this is TopStep, another futures firm. Typically, they used to be the most popular. We're kind of experiencing the downfall of TopStep right now. TopStep X, which is their new trading platform, is terrible. You guys see it. There's a calendar. It's been down like 15 to 20% of the days in the last 2 months. That is unacceptable. You can't have every day this week it's been down. Very silly. Okay. So Top Step X, they literally introduced it, I don't know, however many months ago. Before it was the same where you have like Tradeovate and stuff. It just went down again. Yeah, that's what JoJo said. But absolutely ridiculous. Okay. I wouldn't say I'm going to disregard it. I want to see how this plays out. I still have very, very high standards for Top Step. My payout process is really smooth. The rules are really, really straightforward. But all of that doesn't matter if you can't trade on it, right? So I'm not going to recommend this. Like, we'll see what that looks like. But again, Top Step's been the industry standard. I've liked it. The experience has been all right up until kind of recently. But what are the rules, okay? First of all, let's look at pricing. So a $50 eval fee is pretty reasonable for a 50K account. 2K drawdown, 3,000 bucks, right? That's for the standard. There's the other option for no activation fee. No reason to get the Top Step no activation fee. The alpha offer is better, okay? What Top Step does better is they have more allocation, so you can copy trade up to 5 accounts. I know several of you in this call trade or have traded and received payouts on 5 Top Step accounts. Very nice. Okay, 5 is like the standard for like a threshold that I always like to be trading. Can make you a lot of money. So let's look at the payout rules. The reason Top Step has been the industry standard is because they've made it the easiest. 50% split with a max of 5K. So in this example, let's say you build up a balance of 5K. Your split is 50%, so 2.5 grand will go to your bank account. 2.5 grand will be left as a drawdown. In this case, 5 winning days of 150 bucks. That is it. That's why Top Step has been so nice. You don't have to worry about a lot of the BS that you deal with some other firms. Real straightforward when you can trade it. So my experience, I don't use Rise for my payouts. There's 2 ways you can receive payouts through, I think Rise, I don't even know what to consider Rise as. It's like a wallet almost. I don't know if it can take crypto or whatever, but you can connect it to a Rise account. Money goes to your Rise account. You send the Rise money to your bank. I always just do bank transfer, so it takes a little bit, but the approval for Top Step, you're never going to get denied for a Top Step payout. My payouts get approved within usually 24 hours, sometimes a little bit more. Real straightforward, right? Real nice. Again, am I going to recommend Top Step right now? I'm going to have to see what happens. Up until recently with the Top Step X problems, it's been very, very solid, right? Let's move on. So, let's talk about Apex. This is a very love-hate relationship. Okay. I've made most of my money as a prop firm trader with Apex Trader Funding. I've been with them the longest. I've only traded Top Step since pretty much the start of Traders Compound. So I'm not even on a live account with Top Step yet. I haven't cycled five payouts on one account yet. Um, that'll be something interesting to talk about because I'm gonna be live soon, I think. But Apex is the best because it's the cheapest. Like it's hands down the cheapest you're gonna get. With that being said, you pay for the cheapest like quality, right? So Apex is always running 90% off codes, 80% off. Like you can get an activation fee for like 70 bucks. You can have a PA account all in for literally like 90 bucks sometimes, depending on the offer they're running. You can't beat that price wise. Super, super cheap, all right? Also, if any of you are interested, I have a code for it to always get you the max, what's it called? Discount. So yeah. Reason it's the best beginner firm is because again, capital preservation. You want to dip your toes into futures, you want to dip your toes into copy trading, dip your toes into prop firms. Again, you want to do so while trying to protect your capital. Try out a $15 eval. Now, what are some issues with Apex is that the payout rules are absolutely tragic. So the other ones we've went through are very, very standard, where you just have to get like a maximum amount of winning days and you can request. With Apex, you have to deal with a buffer and you have to deal with the same winning days. And then the payout process is an absolute pain and it takes forever to get approved. So, what that looks like is you have to introduce a buffer now. So let's say, for example, on Top Step you have $3,000 and on Apex you have $3,000 on a PA and an XFA, right? With Apex, the max withdrawal you can have is $900 because you need to leave a buffer. The buffer changes for each account, right? With Top Step, you don't have to worry about that. This could be good or bad, but if you want to get substantial payouts, you have to build up a crazy, crazy, crazy account balance to even get like a minimum payout you'd get on Top Step typically. Alongside of this, the worst part of Apex Trader funding is trailing drawdown. What is trailing drawdown? Is that it's based on unrealized P&L. So let's imagine that you go up $250 in unrealized profit. And then, like we've seen this week, if it's choppy price action or there's confluences going against you, you want to go break even, protect your position, and then you get stopped out at break even, technically the unrealized profit you were up of $250, that gets docked off your trailing drawdown of your threshold. So stupid. That's how I blew my accounts at the beginning of Traders Compound. I wasn't actually losing trades. I requested a payout, and then I just got slowly dwindled down by actually managing a position correctly. Not ideal, right? With that being said, you do get 500 more for a threshold. Very silly though, right? Especially we go break even a lot, right? It's actually a good thing to do. Protect your position. You get punished for it on Apex, right? But again, it's like you pay 20 bucks. This is like 20 bucks worth of quality from a firm, okay? Now, what is the ultimate like cherry on top for this firm is the max allocation. You can have 20 accounts, guys. 20 accounts. Imagine copy trading 20 accounts. You can get a payout of 500 bucks on each account, and it's five figures. Incredible. It's the reason I always go back, is because I can say, well, I'll dip my toes back in. I'll copy trade, seven, eight accounts. And then I get a really juicy payout, and I'm like, oh my gosh, I love this. I can copy trade so much. I don't have to worry about manually entering on other firms. And then I got rinsed by the trailing drawdown, and I take a break. But the max allocation, best in the industry, right? So as you can see with a lot of these firms, they both have strengths, weaknesses. Overall, what I would recommend is alpha for now. I am probably going to look at like a trade copier or something maybe. I wouldn't be able to enter on alpha right now because I can only trade two firms. My funded futures is also very similar to alpha with the payout rules. I don't have it charted out, but that's a good one. But these are all futures firms that we've just talked about. So we're going to talk about FTMO right now, Matt. We're going to dive into Forex firms. What we just talked about were futures firms. So a little misunderstanding about futures firms is that people think you can't trade currency pairs on futures brokerages. You can, you just have to trade the contract. So if you trade, what's it called? You can trade currency contract pairs, but it has to be against the US dollar. Okay, so maybe they changed that then. I haven't traded. Another thing about Apex, rules are changing all the time. I haven't traded with them in a couple months. But yeah. Okay, Forex firms. What is the main difference between Forex firms? Is this going to be the upfront fee and the drawdown that you get? So FTMO and other Forex firms, what you're going to get is it's way more expensive upfront, right? So a 50K is 400 bucks compared to what we were talking about earlier, where you could get an account for as little as like 75, 80 bucks, all included for a 50K account. Now, why is that? It's because you get a much bigger drawdown percentage. You get 10% drawdown on a 50K account. That means you get a $5,000 buffer as compared to a $2,000 buffer. That's a lot more wiggle room to work with, right? With that being said, it's a two-step evaluation process and your profit targets are higher. Okay, so in the end, it kind of evens out a little bit, right? But two-step evaluation means that you have to pass two times. So you've seen sales results for FTMO. He passed one phase. He has to do the next phase where the profit target is lower, but he's still not trading, and you're still not trading on the second stage for a real payout. There's a little bit more work you have to do before you get to the point where you're eligible for a payout. So it's a little bit more time consuming. So comparison is that if you're a beginner, I don't know if I recommend FTMO because of that upfront cost. Again, the whole point of why we use prop firms is leverage and capital protection. When you're learning with a firm like FTMO, you can easily rack up a fat bill of blown accounts when you're still trying to learn. Is this great later on when you're very, very good at what you do? Absolutely, right? Now, where do Forex firms really shine? And that's with the payout rules. So the payout rules, I believe, for Top Step is that you get an 80% profit split after 14 days from your first trade once you're eligible. So once you've passed the first and second step, you can get 80%, which is a lot higher than like the 50% for Top Step, and your balance doesn't go to zero. Okay? So what that means is that you get to keep the total drawdown of your account. So with Top Step, what happens is if you have a $5,000 account balance on a FTMO and you have a $5,000 account balance on Top Step, what happens is with FTMO, you technically can lose you'll have to lose $10,000 for the account to be blown. With Top Step, you'll have to lose 5,000. Whatever the account balance is, it goes to like 50,000 or zero, essentially, right? So when you take a payout with Top Step and you take half, let's imagine we just do half and half. So you request 2,500 on FTMO and you request $2,500 on Top Step. On Top Step, you only have the amount that's you left in your account balance to work with. You only have $2,500 left. With FTMO, you still have the initial drawdown balance of 10% plus what's left in your account to work with. Much easier to keep an account after a payout comparatively to these futures firms, right? So, payout wise, like these Forex firms are incredible. Now, what are the issues? What are the downfalls of Forex? Is that they have something called slippage. Slippage is something you guys might, I don't know how many of you trade Forex firms here compared to futures. You don't get exact entries and exits, right? So on these calls, when I'm like very quickly moving to break even, sure, it's not going to be exactly zero. There's fees and futures isn't perfect either, but it's a matter of like 10, 15 bucks. Sometimes a little bit more, sometimes a little bit less. Sometimes you make money on a break even trade. With Forex firms, you could place your limit order at break even and you're going to get slipped for a lot of money. I'm sure a lot of you experience that, right? Super annoying. You can't go break even exactly. You're going to get docked for a lot because the positions don't fill exactly where your order is filled. Just how Forex brokerages are. It's how Forex works. That is one of the main reasons I switched over to futures, right? So your positions slippage is going to get, so even though there's a lot higher account drawdown, small things like slippage, you're still going to get chipped away at through dumb things like slippage. So something to note, right? That's that's kind of the comparison between Forex and futures. The other thing is I've traded Forex accounts. The reason I stay away from Forex firms is the regulation is a lot less tight for these firms compared to futures. I traded on several Forex firms that just get rug pulled and they just go under. You don't have to worry about that with a lot of futures firms because they have a lot more compliancy rules because of like their futures and they're US regulated, right? So that's why a lot of these Forex brokerages aren't allowed in the United States even or stuff like that. I know FTMO is now, which changed that. I didn't know that was. a thing, but it's related to a lot of regulatory issues. Like I traded the Funded Trader was one of the first Forex firms I stepped into, right when I was about to pass my first ever account, gone, right? They just took my money and went under. Nothing could do about it, right? A VPS to trade Forex, yeah, that's again, it's not every other firm other than FTMO isn't regulated in America and you can't trade it. That's the difference between the two. I think right now, what I would recommend is I would recommend Alpha, or if you're very, very new to prop firms and you're, I wouldn't say pinching pennies, but you're cautious with how much you're adding up on these firms, Apex, again, some of the rules are a little bit stricter, but just while you're learning, you can learn for cheaper than paying a real-time data fee, right? So Apex is always good for that. You don't want to stick with Apex long term, I'll be honest. But I'm gonna see what Top Step looks like. Obviously, if Top Step X as the brokerage and as the trading platform they're gonna pursue with continues to go down every single day, and your account balances are getting reset every single day, it's just gonna be a waste of time. It's unfortunate that that's what it's been because Top Step's been great up until recently, but Alpha Futures or Apex are really good. So that's comparisons. That's a little bit of a deep dive into different types of firms, what to expect. And again, the power with these firms does really rely on you knowing what the strengths of the firms are, capital protection and leverage, and how to leverage these tools properly. Don't get one account and think it's the end of the world. Don't don't make one account like win all or lose all. It's not the end all be all, right? Copy trading is why prop firms work. It's not based on one account. So for those of you that you know that just have one account, don't let the psychology that they put on you and all of these numbers and these big payout caps, don't let that try and trick you into the reality of what the account offers. You're not gonna make 5 figures a month off of one prop firm account consistently. I know a lot of people can vouch for that and have experienced that firsthand, what it looks like trying to copy trade versus what it looks like trying to trade one account. Again, would you rather make 25 RR on one account or make 5 RR across five? Which one's easier working with the drawdown limits? And that's exactly the point that I was trying to make on Monday is that people have that reversed 90% of the time. That's the struggle, is they're trying to do it the wrong way. Okay. So understand these firms, understand how they are as a tool, and utilize them. They're very, very incredible. Like I can't even express how life-changing a prop firm is. I probably wouldn't even be trading right now if it wasn't for prop firms, just because of how easy it is to be introduced to and have leverage as a trader, right? So that's what I have for you guys today is I wanted to run through comparisons. Check out Alpha. You guys can go on the website. Everything's listed relatively clearly. You can see the rules that were marked out. You can check out more of the payout rules. Also, for account sizing, the reason I don't use 100Ks or 150Ks is because it's really only useful for one payout. Like I was talking about, if you have a $5,000 account balance on a 50K and you have a $5,000 account balance on a 150K, if you take out half on both, your drawdown is still $2,500 on both accounts, regardless of the account size after one payout. Your drawdown is only bigger for your first payout, right? So the 150K is probably like what, a 5K drawdown maybe? So it'll be useful to have that wiggle room when you're on a live account for one payout. After that, it just gets reduced to zero. So it doesn't matter after that. So for me, it's not worth it. Sure, leverage will be a little bit bigger. You'll get a little bit higher of a first payout, but after that, you know, it's going to be the same. So I'd recommend checking some of these out, and I would pair this with the video on Monday. Know how to use these tools, know how to use these resources, right? So Connect those two. Ask me any questions that you have regarding what we've talked about this week. And this is, again, this is a little bit more of the boring stuff. I know we want to sit here and we want to execute, but if we don't know what we're even doing with these executions, it's all useless. It really is. It's just a waste of time. Okay? So I wanted to make this really clear how I trade, the significance of how I trade, and yeah, emphasizing and showing what realistic results that we've achieved through the program are, articulate it a little bit better for you guys, explain a little bit more of the in-depth stuff. But anyone have any questions for now? What's the best way to copy trade? So copy trading is really, really nice when you're trading within the firm because all of the accounts stack on top of each other. I didn't even emphasize copy trading. I apologize. But copy trading, the reason it's so powerful is because you take the same exact execution on the brokerage, and then depending on what brokerage you're using, like Tradeovate, you get a group, and then it splits your contracts into the group. It's yeah, it's literally you do one entry and then it goes to all five. So like I said, it's literally a 5x leverage. Do all firms copy trade? Yeah, they all have copy trading options, but like you see, some of them have different amounts you can copy trade. Alpha, you can only trade 3 accounts. Top Step, you can trade 5. Apex, you can trade 20. So the trailing drawdown, I can talk to you a little bit about that privately, Jesse. We'll get there, but I'll privately message you about that. Do you anticipate Top Step fixing their issues given their history of good performance? I really do. I'll be very honest. I'm very surprised to see issues with that. Like again, I'm not sure how long many of you have been trading prop firms, but Top Step has been that golden standard for a very long time, right? Never denying payouts, quick disbursement of funds, good pricing. So seeing the fact that Top Step X you can't even trade is so silly. Copy trade. Okay, so that's one of the issues I have, Kevin, is that I'm right now I don't use a. I'm gonna look into getting a cross firm called copy trader. I forget what they're called, but I have to manually enter. So for Top Step, I use my phone, and then for my fund and futures, which is the other firm I use, I just pull up my brokerage. I use Tradeovate on my laptop. Really annoying. I have to manually do it on two separate devices. That's not ideal, right? So right now my leverage is capped to my funded futures and Top Step. So my capital, I can only do so much there. What's the thing called where you can, if you have the same brokerage, it's something trader or whatever, and it copies all of them. I don't know. Trade Syncer, bang. Trade Syncer is helpful. I I'll be so honest. I've heard horror stories for stuff like Trade Syncer. Again, it's kind of a newly introduced thing. I want to see how it goes. But what that allows you to do is it ties all of your accounts from all of your prop firms. Same deal. You just enter on one thing and it copy trades to all your accounts. So, yeah. But again, the main emphasis here is that you're getting crazy leverage from these firms. Use it appropriately, right? So, typically I like to cycle just one payout a month. I most months I won't get two payouts. If you guys look at the data, I usually get like 5 to 6 winning trades a month, if that, right? And if we look at that from a distant standpoint, we're like, well, that's not enough. That's minimal, right? Sure, when we're trading one account, it's nothing. But when we're trading at a consistent win rate, relatively, obviously, it's not going to be perfect, and we're managing around that drawdown, and we're trading higher capital, and we're not ever in worry or we're not threatening these accounts with the drawdown. One cycle of payouts per month is literally all you need, right? You guys can go look at the math. You can do it yourself. You can look at the example I showed on Monday with real like RR results from the program. But trade syncer is the top step of copy trading. Okay, so not good then. Yeah. But yeah. Anything else, guys, for now? For those of you that are VIP students, you can message me about trailing drawdown and I'll explain. But yeah, I got you guys. Again, this is the boring stuff sometimes. I know you just want to enter, but these are all tools that you have to understand and you have to grasp and piece everything together. So, real important stuff here. Yeah, and I hope it should help, take the pressure off like what one account means. That's what I see with a lot of people in issue is that so much pressure. Even if you only get $500 a month, if you have 5 to 10 accounts, that's leverage. That is the point of what these firms are. That's the point of how I built my model and how I built my trading. Is that how can I consistently avoid the drawdown? What does the win rate look like? What does the leveraging position sizing look like so that I'm not going to blow an account and I can consistently no matter what the size is, as long as I can have a green return on the month, that is all I care about without hitting the drawdown for these accounts. And when you can do so consistently, again, do the math. Very crazy. So, awesome, guys. So that's what I have for you guys. Tomorrow, we're going to be trading, right? Today, I don't trade on CPI, PPI, hands off, don't even bother looking at the charts. But yeah, this week has been I hope it's been helpful behind the scenes stuff. So I'm hoping we get an execution because, yeah, Christmas, New Year, that's something I'm going to talk with Sal about because, to be honest with you, next week might be brutal. Like, we can trade, but it could be not a waste of time. It's not a good way to put it, but kind of like what you've been seeing, like yesterday, like we might get absolutely gross price action that isn't really worth sitting through. You know what I mean? So we will be, we'll have discussions about it and we'll figure it out. Maybe more of these tutorials. Yeah. I'll have to think of what the next topic is. This week has been prop firms and managing positions. So any recommendations? Always open to hearing thoughts. What would you guys want to hear about next? Backtesting could be valid. I'd have to figure out what's it called? FX replay. Because the issue with FX replay is you lose the sessions indicator is terrible, which is kind of like a very big aspect of how I trade. But yeah, so I'll look into backtesting, but We'll see. We'll see. We'll see. Got you guys. Always want to be of help. Always want to give you guys value and improve what y'all have going on. So I appreciate you guys sticking around for this. Again, the boring stuff is important. So that's what I'll leave you guys with. I'm assuming the recording will be uploaded in prop firms again. That'll make sense. Go watch it. I'm pretty sure there was an option to like speed it up. So even if you're just like walking or doing something and you want to listen, you can speed it up. I don't necessarily think there's anything you have to like visualize. Maybe it would help with, but you can listen to that and refresh your brain. So I'll wrap up the call here, guys. Thank you all so much for sticking around. Hopefully, we get a trade on Friday. Wrap up the week with something. I honestly, I just want a clean execution. Win, loss, anything. I want to see some form of the candlesticks moving at all. So hopefully that looks all right. But I hope everyone enjoys the rest of their day, and I'll see y'all tomorrow. Take care, everyone.